is Bazaar Morning Call.
Good morning. Welcome to Bazaar Morning Call, and on behalf of all of us here in CNBC, a very happy Dhanteras to all of you viewers. May this year bring you a lot of dhan, a lot of happiness, satisfaction. Morning, both of you, and a very happy Dhanteras to you as well.
Happy Dhanteras to you, to all our viewers. You said a lot of dhan, a lot of health as well, right? Because health is wealth eventually.
Absolutely.
So I hope...
Dhan, man, dhan, I guess.
I hope everything plays out well. Anuj, happy Dhanteras to you. What's your biggest dhan?
Happy Dhanteras, Sonia. I mean, I think everyone knows my two daughters. So obviously, Dhanteras, right? 13th day of the lunar calendar. 15th day is the Amavasya and the Diwali, the big Diwali, and that's, of course, today marks the beginning of the 5-day Diwali festivities. So, to all the viewers, may this be a very happy and prosperous year, and the darkness of the last few months in the portfolios perhaps is lightened up.
It's brightened up a bit, and will hopefully brighten much more in the months to come. Well, actually, today we're bringing, I think, we're starting the Diwali week with very good cues. I mean, what more do we want? Crude is down, yuan is down, dollar is down, yuan is up. All these are extremely positive for our own macros. And to add to it, of course, strong jobs data from the US as well. But I think for me, one of the best news is the way Axis results turned up. Yeah. I mean, I pick up Axis and ICICI. Today's SBI numbers, these big banks are actually the proxy of the economy. So when they are casting away the pall of gloom of the past, it's very important. It's a very important positive signal for the economy itself. So I assume Axis Bank is going to bring a lot of cheer for the Diwali week, to start the Diwali week, and one hopes SBI will carry the baton on. But then we should always remember the darkness that is also, haunting us. There is red on Wall Street, red on all the Asian screens, and a rather deep red, and that's because of the global growth scare. There will be higher inflation, lower growth, and higher interest rates from the Fed, and the markets are discounting that.
And there's also the midterm congressional elections, right? That's being held in the US. So there could be a lot of volatility.
We'll get the results tomorrow. So
we'll know more. But having said that, Anuj, this week is going to be all about sentiment. It's going to be all about positivity, right? A lot of people making those token trades as well. However, as a trader, how do you approach the week? I mean, do you think it's going to be a movement on the upside, or is there going to be a lot of volatility?
Yeah, so of course, don't let the festive emotions get in between what the screen is telling you. But, we love to talk about all these numbers and all these cues. But the fact is that this is about a move for emerging market versus developed market. Are we sensing some kind of a divergence now? Last week we were up, but MSCI India was up 7.6%, emerging market was up 7%, Asia ex Japan was up 7.3%. For a change, of course, we were better in dollar terms than rupee terms. But the S&P 500 is up only 2.4%. This year also, I mean, just look at that. We are performing absolutely in line with the emerging market, and nobody should have any illusion about that, And the US, of course, is up about 1%. Rhythm was making this point that the S&P outperformance compared to the emerging market universe perhaps is highest that we have seen in many years now. Could that be at the cusp of reversal? That is more important question for the medium term. In the near term, it's been a tradable pullback. Whether it's the start of something big or just a counter trend move, we'll find out. But right now, the market's message has been in the near term, absolute near term. It's been a buy on dips market. So the good chance that this morning the dip does get bought. But the only point I would like to make here is that don't extrapolate what ICICI Bank did with Axis Bank today. And there's a reason for that. Axis has already rallied a lot. And there's going to be an overhang of that sooty stake sale in Axis Bank post a good rally and post good numbers. So that's why there's a good chance that if it opens higher, perhaps there's some kind of profit taking Axis, which was not the case with ICICI, because over there, perhaps there were not as many, long positions. Also, SBI numbers today, and they'll be during market hours. So that could be very important to track.
Especially because PNB has so much spoiled the mood. I mean, otherwise we were getting very good numbers from corporate banks.
Exactly.
So let's be careful.
SBI perhaps should report good numbers. Of course, what I would like to see is in terms of the asset quality, SR, how do they sort of manage that? But the market might want to just remove the weak longs from the system. and then perhaps resume a rally. The one thing that I would want to see today is how IT index moves, because it's corrected to 200-day moving average. That's been the leadership pocket for the market. It has had a brutal correction. It's gone to 200-day moving average. Let's see how that one does today. Perhaps it outperforms because overall, everyone's gone long on banks and short on IT. In the near term, perhaps that trade may reverse, but I would want the market to give me that verdict.
Okay.
Also,
well, I just wanted to take the point which, and that's a very important point that Rhythm made. That the developed markets have had a great year, and the difference between the developed market performance valuations and the EM valuations is at its peak, and probably a lot of people are now believing that value is returning to emerging markets and value has overstayed its welcome in DMs, and that's seen in our FII numbers. That's the point I wanted to continue. Throughout October, we had a huge selling, $3 billion selling by FIIs, but we had very small selling numbers and even one buying number in the past 2 or 3 trading days. So, the 1st, 2nd of November, we seem to have seen a change in mood of FIIs. And Nigel was pointing out that even in the futures market, the amount of the puts they are writing is like significantly high. I think he said 72,000 contracts compared to just 27,000 contracts of calls. So, they're ready to support the market at higher and higher levels, which indicates probably a change in stance.
Oh, and we mustn't forget the fall in crude, right? I mean, $72 a barrel now. I think it's a 15% slide that we've seen over the last 1 month in crude. And NYMEX crude has fallen 6.5% just in the last 1 week. So that's a big, big tailwind for us. But on that optimistic note, let's tell you what our wise men have to say as we head into trade this morning. Chris Wood of CLSA says the near-term issue is this week's midterm congressional elections to be held on the 6th of November. Logically, he says the Republicans should win because of the stronger economy, though the word is that the tax cut, the major achievement of the Trump presidency thus far, and certainly the most important driver of relative returns in financial markets this year, is not a vote winner on the street. He adds the expected result, where the consensus now expects the Democrats to win back the House of Representatives, will mean renewed gridlock, which is neutral for the stock market at best.
Okay, well, so long as it's not negative, we can go ahead with it. There's more equity opinion, actually. Derek Higa of William O'Neill says they are upgrading markets in mainland China, Japan, India and South Korea to a confirmed uptrend. Thus, they are recommending again to gradually begin allocating capital to actionable growth ideas as they break out of sound bases. Derek says at the stock level, significant technical damage remains, and although many oversold stocks gained last week, it is still early in base development. He continues to recommend patience as stocks begin to find bottoms and build the right sides of bases while significant overhead remains.
Okay, well, that's the view coming in on the equity markets. But on the rupee, B. Prasanna of ICICI Bank says last week the rupee registered substantial gains on hopes for improvement in the US-China trade relations as well as the dramatic softness in oil prices. He says the current truncated trading week will have to negotiate volatility on account of developments on the sanction front, UK cabinet outcome on Brexit, the FOMC meeting and midterm US elections. Hence, he says the rupee is likely to give back some gains during this week and may trade in the range of 72.60 all the way to 73.40 as well on the downside.
That's the trade. Anyway, the bracket for the week. Now, for the moment, I guess it should be a little stronger because the yuan has gotten stronger. B. Prasanna says the favourable demand-supply dynamics in sovereign bond market following OMO purchases, open market operations, calendar for November has got additional tailwinds from sharp gain in local currency and softness in oil prices. He says the sovereign bonds, that's government securities, are likely to consolidate gains during this week amid positive FII flows, even as strong US jobs report and profit booking pressures act as headwinds. He sees the trading range for the 10-year benchmark bond yield between 7.75 and 7.85 for this week.